Magandang gabi. Good evening mga mare at sa mga viewers natin. Welcome po dito sa aming 𝗧𝗪 podcast.
Good
Good
evening din,
evening,
Mare. Good
Mare.
evening din sa mga tagapakinig ng ating podcast.
Okay, panibagong araw, panibagong diskusyon na naman ang ating kapupulutan ng aral.
What's your topic ba for today's video, Mare?
Wow naman, English speaking ka na ngayon ha?
Oh my God, of course. Alam mo, kung di mo natatanong, first language ko talaga ang English.
Oh, talaga naman
Hindi, joke lang. 70th language ko talaga to.
Alo, ba't 75th?
Ganito kasi yan. Nung college ako, 75 lang yung grade ko ng English. Kaya yun, 75th. Huwag kang ano dyan. Anyways, ano ang topic natin for today's video, mga Mare?
Ano pa ba? Siyempre, ang favorite natin, ang tax. Particularly sa taxability ng interest income. Tapos yung concept ng final withholding tax. At yung administrative requirements ng interest income.
𝗪𝗁, favorite namin yan.
Lo, wala decision ka, be? Ikaw lang, hindi ko favorite tax. Charot.
Uy, anyways, before discussing this topic, pwede naman natin siguro i-discuss muna ang general about tax. Sa'yo, Jacob, ano ba yung tax para sa'yo?
Actually, ang tax para sa akin, mare, is para yung pag-ibig Para yung pag-ibig. Na kung walang pag-ibig, magugulo lang tayo. Lalo na sa ating society. Parang ganon.
Nox naman. For me,
Grabe ka naman.
tax is charges upon persons, property or property rights for the use and support of the government. Diba? And thank you.
Grabe, pang Miss Universe yung sagot mo, Mare,
Oo nga, pang Miss Universe. Pero ikaw, Jade, what is
bakit
tax for you?
Oh my God. Tax. May mga akong sa tax na yan. Hindi, joke lang. Para sa akin, napaka-stressful ng tax. Like, oh my God, pag nakakita ko ng numbers, boom, baluktot yung utak ko. Pero ang pagkakaalam ko sa tax, yun yung bagay na nababawas sa sahod ng mga nagtatrabaho.
Actually, Jade, hindi ka nagkakamali dyan.
Okay, right. Nasa exciting part na tayo. Interest income. So, ano na?
This is it. This is my favorite part, Mari.
Oh my God, ito yung interest income, tunog pa lang, tunog di ko maintindihan. Alam mo yan?
Ganun talaga.
Joke lang.
What is interest income? Interest income refers to the income earned from a bona fide indebtedness extended by a creditor or the holder of the promissory note or bond. No interest income may be imputed in a transaction where a shareholder gives a sum of money to a corporation as deposit for future subscription, not bearing interest and not subject to repayment or redemption. As such, deposit is a contribution to capital and not bona fide indebtedness. As a general rule, interest income earned from bank deposit and deposit substitute is subject to 20% final withholding tax. As an exemption, you have to take note of the following that are not subject to 20% final withholding tax. First, interest income from long-term deposit and interest income from expanded foreign currency deposit. You must take note also that if the interest income was not earned from bank deposit and deposit substitute, the 20% final withholding tax will not be imposed. Instead, the interest income will be subject to normal tax using the graduated tax rates under Section 24A of the NIRC.
So, for us to familiarize ourselves with this topic, allow us to discuss what is interest from long-term deposit. So, this is a long-term deposit or investment with a holding period of not less than 5 years. Consequently, it is likewise exempt from final withholding tax. Pero, when it is pre-terminated with the individual investor, graduated rates of 5%, 12%, or 20%, depending on the period that had lapsed, it will apply on the entire income to be deducted and withheld by the depositary bank. So, in cases of pre-termination of long-term deposits, the mentioned rates apply depending on the period that had lapsed. For 4 years to less than 5 years, we have 5%. For 3 years to less than 4 years, we have 12%. And for less than 3 years, we have 20%. So, as summarized in the table that will be presented on the screen, take time to familiarize yourself with this kasi sobrang importante nito.
Another topic that we need to familiarize with is the interest from expanded foreign currency. Interest income received by residents from a depository bank under the expanded foreign currency deposit system shall be subject to a final income tax at the rate of 15%. Interest income received by non-residents, whether citizen or alien, from a depository bank under the expanded foreign currency deposit system shall, however, be exempt from tax. If the deposit under the expanded foreign currency deposit system is a long-term deposit, the interest income is exempt from the 15% final withholding tax. These rules on interest income derived from long-term deposit and expanded foreign currency deposit will apply only when the source of the interest income is a bank deposit or deposit substitute.
Okay, what is a deposit substitute? The tax code defines the term deposit substitute as an alternative form of obtaining funds from the public. By the way, the term public means borrowing from 20 or more individuals or corporate lenders at any one time. If there are 20 or more lenders, then the interest income is sourced from a deposit substitute. Resultantly, the interest income is subject to a 20% final withholding tax. If there are 19 or less lenders, the interest income is not sourced from a deposit substitute. Thus, the interest income is subject to a normal tax using the graduated tax rates under Section 24A of the NIRC.
In the en banc case of Banco de Oro versus Republic of the Philippines, 𝗟𝗲𝗄𝐵C Capital entered into an underwriting with the Caucus of Development and GO Networks, where 𝗟𝗲𝗄𝐵C Capital was appointed as the issue manager and lead underwriter for the offering of the peace bonds. Sinabi ng BIR dito na yung peace bonds, being deposit substitutes, ay subject to 20% final withholding tax on the interest or discount from the peace bonds. And since 𝗟𝗲𝗄𝐵C lends the same to 20 or more borrowers, which is within the 20-lender rule. Pero sabi ng 𝗟𝗲𝗄𝐵C, in determining the number of borrowers, the primary market should only be considered. Yun yung CODENGO and 𝗟𝗲𝗄𝐵C as sole lender mismo. At hindi 𝗟𝗲𝗄𝐵C to other lenders, which is the secondary market. The Supreme Court ruled that the reckoning of the phrase 20 or more lenders should be at the time when petitioner-intervenor 𝗟𝗲𝗄𝐵C Capital sold the peace bonds to investors. Should the number of investors to whom petitioner-intervenor 𝗟𝗲𝗄𝐵C Capital distributed the peace bonds, therefore, be found to be 20 or more, the interest income derived from the peace bonds are subject to the 20% final withholding tax. Thus, petitioner-intervenors 𝗟𝗲𝗄𝐵C, CODENGO, and 𝗟𝗲𝗄𝐵C Capital, as well as the final bondholders who have recourse to government upon maturity, are liable to pay the 20% final withholding tax.
On the interest income from cooperative banks. Under the Revenue Memorandum Circular 47, 2011, clarification on the taxability of interest from savings and time deposits of cooperatives member under Section 24B of the NIRC of 1997 as amended, provides that 20% of final withholding tax shall be imposed on amount of interest from any currency bank deposit and yield or any other monetary benefit from deposit substitute and from trust funds and similar arrangement. Thus, as discussed in Dumaguete Cathedral Credit Cooperative versus CIR. In this case, the Supreme Court ruled that cooperatives are not required to withhold taxes and interest from savings and time deposits of their members.
At ngayon, dumako naman tayo sa susunod na topic, final withholding tax.
So ano nga ba ang final withholding tax? Final withholding tax is a type of withholding tax wherein the withholding of the same and the remittance thereof to the BIR will extinguish the taxpayer's liability and is prescribed on certain income payments and is not creditable against the income tax due of the payee on other income subject to regular rates of tax for the taxable year. In essence, income tax withheld constitutes the full and final payment of the income tax due from the payee on the particular income subjected to final withholding tax.
Final withholding tax on interest income by an individual. Under RA 8424 of NIRC, 20% interest from any currency bank deposit and yield or any other monetary benefit from deposit substitutes and from trust funds and similar arrangements. Under the CREATE law, the final tax rate on the interest income under the expanded foreign currency deposit system is 15% final withholding tax. The stated 15% shall apply to resident individuals, domestic corporations, and resident foreign corporations. However, the following are exempted: non-resident foreign corporation, non-resident alien, and non-resident foreign corporation.
Dumako naman tayo sa administrative requirements. As a general rule, all income tax returns must be filed. All individual taxpayers must pay income tax.
In the same topic of administrative requirement, substituted filing also covers interest income. You have to take note that substituted filing applies when there is one employer only, the employee meaning the income earner must be purely compensation income earner, and that taxes had been correctly withheld. If the taxpayer is not purely a compensation income earner but a mixed income earner, then the taxpayer shall be required to file his annual income tax return. If the employee or the taxpayer purely compensation income earner but he has two employers during the taxable year, whether simultaneously or consecutively, then he is not likewise qualified for substituted filing, and therefore he must file an annual income tax return at the end of the taxable year. For the application of interest income is substituted filing, we need to take a look at Revenue Regulation 8-2018, in which it is stated that individuals deriving other non-business, non-professional related income in addition to compensation income not otherwise subject to a final tax is not qualified under substituted filing. What if the situation is this? A person is a compensation income earner and he also earned interest income, then can he still file for a substituted filing? The answer is yes, because the other income is subject to 20% final withholding tax. What the revenue regulation prohibits is the person who is a mixed income earner, which is a person who is a compensation income earner, and at the same time that person earns income from his profession. Furthermore, the interest income earner whose interest income is subject to final withholding tax is not required to declare the interest income in the annual income tax return.
Ayun na nga mga mare, sa pagtatapos ng ating diskusyon patungkol sa taxability ng interest income at mga concept ng final withholding tax at administrative requirements ng interest income, sana ay may mga napulot na aral ang ating mga manonood. Di ba mare?
Kaya nga napaka-produktibong talakayan nga Mare ang inihanda natin sa mga nakalipas na diskusyon na ibinahagi natin.
At saka akalain niyo yun, ang dami nating nalaman at ang dami nating sinabi at naibahagi patungkol sa mga ganitong bagay. Lalo na sa viewers natin at lalong-lalo na sa mga law students na nanonood ngayon sa podcast natin.
Tama ka dyan,
Kaya sana sa mga susunod na talakayan makapamahagi ulit tayo ng iba't iba pang diskusyon patungkol sa mga ganitong bagay upang mas malinawan ang ating mga taga-pakinig.
At sa mga susunod mas tangkilikin pa nila ang mga ilalabas nating podcast sa taxes.
So ngayon sa mga minamahal naming viewers, magpapaalam na muna kami. At abangan nyo ang mga susunod pang kabanata na patungkol sa tax na mga episodes namin, ganyan. At kung paano at ano pang dapat nilang malaman about dito.
Alright, hanggang sa muli at sa mga susunod pang diskusyon. Salamat.